What's good? Hope everybody is doing well. Today is November 15th, 2023, and time has passed. Time has passed. One of the things that we talk about a lot is how to assess time and use time to your advantage. And so it's been a while since we've had a chance to talk. It's been a while since I've streamed. And what I've always encouraged you to do, because the advice I take myself, is get your butt out there and work, work, work. Do what you can so that way you can stack up some fiat to go ahead and throw into these markets. This is going to give you the opportunity that can change your financial future. And so I've got a lot of things that I've been kind of just keeping to myself. And today I plan on sharing all of it, all of it with you guys today. And so I really appreciate you guys popping in. I know that you guys probably would like a more regular type of stream, but sometimes, in my opinion, I think allowing yourself to take some time to assess how things are going, stick to a good strategy. Don't get, I would say, sideways or distracted by all these different viewpoints that you may be looking at every single day, every single week. I heard an interesting quote, and it's very true. Sometimes the best investors, or more often than not, the best investors are the people that forget the password to like their investment account or whatever the case may be, or they're not the people that's checking up on it every single day, every single week. Because you kind of get yourself off sides, if you're kind of having to focus too strong on one or two particular things all the time. A lot of the time is just let these markets do their thing. As long as you're allocated, you will do a-okay. And so today, I really want to share a lot of good information with you guys as far as the things that I've seen that have developed, and give you guys a little bit of insight on how I am assessing this market currently. So let's address the chat. Thank you guys for coming through. I'm super excited, and we got the usuals, right? Wade, hope everybody is just taking this time to just enjoy what crypto is all about. We got a little bit of life in the altcoins. And, a lot of people have been waiting for this bull run, right? Like, let's go. Let's start this bull run. I know. Trust me. I had that same feeling. And so one thing that I've always tried to stress to you guys is these things are process. And so with any process, there's different time periods to do certain things. If you are kind of, able to understand the flow of capital. And that's a lot of the things that we've talked about on the macro side is how has capital gone into certain things, and then at what point does it come back to something like crypto? And so, yeah, we got some good times ahead of us over this next year or two, and so I'm super excited. And so, how have y'all been? How are y'all feeling? Hit me up in the chat. Let me know, what are you guys thinking over this next month or two? Are you guys thinking that we're gonna just keep on skyrocketing, or do you think that we'll have a chance to kind of settle down for a bit? I have my thoughts. Just from the analysis that I've been able to kind of grab through many different viewpoints, right? And so I really think that we have a chance to, kind of settle here for some time. We've had a really, really good run for BTC. The alts have come back alive, and so we are really going to focus a lot of this conversation here about capital rotation, risk on, risk off, and especially going from Bitcoin dominance to altcoin catching up, and then at some point proceeding and outpacing BTC in dominance. And so I'm gonna give you guys a couple of ways to assess that. That, trust me, nobody else is telling you guys any of this stuff. Maybe because they don't think to say it, but you guys are gonna get it here on this channel. So yeah, okay. And so Alan's saying, settle down for a bit. And the way that I kind of am looking at this is you got to understand, there's short-term holders and there's long-term holders. And as, illiquid supply, especially for Bitcoin, continues to go higher and higher, there's going to be certain levels where these people are saying, okay, cool. They need to start to spend their coins. And so as prices go higher, we're going to start to see that Bitcoin dominance trend a little bit lower. And, typically this is when the altcoins can start to take off past Bitcoin. But these are going to be like the late stages of the bull market. One thing, if you guys remember, I've told you guys, is that, when alts are just going crazy, where everybody's mama, the dog is trying to buy crypto, this is really just like the last like 4 to 6 months of a 4 year process, and so we are trekking along here pretty good. Wade is saying hope it chills out a bit so I can accumulate more before the big moves, and that, my friend, is a great way to think, is because you just want to give yourself as much time and utilize it correctly to be able to allocate at a safe risk premium. And as we all know, risk gets pretty high, especially when you start buying those tops. So I'm gonna actually share this on the stream. One thing that I've been working on through these last few months is learning how to use Pine Script, learning how to code things on TradingView. And so I have a beautiful thing because I get asked a lot, how should I DCA? At what point should I DCA? What if I told you that I created something, that is going to be so helpful for you guys? It is going to be able to help you guys DCA and stay away from local tops. That's the biggest thing. If you can do that, you got like 85% of people beat. And then it's also going to be able to help us say, hey, things are overheated towards the end of this bull market. How do we take those profits? And so I'll pop that up on this stream here and see if y'all have a little bit of feedback for me. See if it actually looks like it's helpful. Because if it is, I may bring it out to you guys, and who knows? Maybe you guys will have some type of access to it at some point. Right now, it's just private. I'm using it for personal reasons. But if you guys see some type of value in it, we'll see. So go from there. We're going to go with the agenda. We're going to start off talking about some of this macro capital movement. We'll move over into Bitcoin. We'll talk about some of the liquidations that have kind of helped Bitcoin rise in price, some of those short squeezes. We'll then kind of look at some metrics to help us understand, okay, altcoin dominance versus Bitcoin. Are we risk on, risk off? And we'll end with some personal type. I would say, like, the reason why I'm saying it's personal is because this is information that I hold so dear to me. I'm going to give you guys some of the biggest things that I use to help me really assess the overall sentiment and just how people like to spend money during certain times of their financial journey. And if you just look around you, people are like, pockets are a little tight, but not for everybody, not for corporations, not for people that can actually get some decent loans. And so we're going to talk about all that stuff here in this stream. The intro is just about 10 minutes. All right, so we're here. Let's go ahead and get it. So let's pop on the big screen here. And we are going to go ahead and start with, if you guys remember, we talked plenty of times here about the reserve repo. So we're going to go ahead and talk about the RRP. And so if you guys remember what this is, and I labeled this is the big banks yield play. Banks are like, hey, we don't want a whole bunch of risk. So if we can get a good yield overnight and not have any type of risk, we're going to take it. And then so the reverse repo was something that really didn't even exist until Jerome Powell is saying, hey, we're going to take these rates up. Inflation is crazy. And in this new regime of capital rotation, big banks has decided to take advantage of this because the Treasury didn't really give them any other better options, right? At this point in time, these long duration bonds were no longer attractive. So this is the best option. And so we've seen something go legitimately from about $300 billion and, something that went up tremendously up to $2.5 trillion at the peak. And so that's an incredible expansion of banks saying, hey, we want this easy yield, because at the time, the yield that they were getting, and still to this day, it's still pretty good, but it has dwindled down. The yield that they were getting, 5.5% overnight. And so overnight means basically, hey, they give money to the government gives it to them the next day. They make 5.5% on that money. And so trillions of dollars flooded in here. And so as inflation starts to dwindle down, as different options come available, like money market accounts, and the 10-year treasury really starting to show some type of dwindling, saying, hey, things are kind of looking to tip over. And we'll look at that here in a sec. Capital has left, almost completely. We went legitimately from 2.5 trillion all the way back down to 900 billion, give or take. And then so banks are saying, okay, cool, we're going to go ahead. This trade is done with it, like for us. Like, we don't need this trade. And so, really, if you want to take a look at it, when we kind of broke down and really stayed down, May of 2023, this money found a new home. And then, so now you have to ask yourself, okay, about $1.5 trillion, where did it go? Well, let's take a look at some data here. So, May of 2023, let's just take a look at the general. So, what is Bitcoin doing during that time? You know, pumping, right? Bitcoin is pumping during this time. So, you start to see things dwindle down. Bitcoin is having a chance to grow in market cap. Also, what else was pumping during that time? So, let's even pop up, right? The NASDAQ. So, NDX, the NASDAQ getting fresh liquidity. So, let's pull that up and see if we can get that on log scale. Okay. Right. All right. So what we need to do is put this on a new price scale. So NDX, let's see if that works out for us. We may have to take off Bitcoin first. So NASDAQ pumping during this time as well. All right. So if it's not going to show us the price data, what we'll do is we can actually just back test this and go to the NASDAQ chart here. So let's just go to the NASDAQ. So remember the date that we're looking at. We're talking about May of 2023. So we're talking just a few short months ago. All right, beautiful. So the Nasdaq during this time, in full on, and because this is a large breakout. If you want to look at price being clustered here in this area, and then this large expansion up, this is money saying, hey, we have decided to get rid of that reverse repo trade at 5.5%, and we are willing to go a little bit more risk on. And so, this is what's going on. Now, why potentially would they say they want to leave the reverse repo? 5.5% seems pretty good. Well, there's money market accounts that are offering things at a better rate, but also at the same time, bonds. So bonds are a huge part of understanding this capital rotation. And so one thing that is clear to see, especially in this new regime, is understanding that there are new normals now. So this is the name of the stream, new normals of how money is flowing. And so we're not going to look at too much information past like 2008 because there's Fed printing now that comes into play. They even introduced a new way to add a little bit of synthetic QE, right? When these banks were going down early this year. And so there's a new regime because the government is continuing, meaning the Fed and the Treasury, they're continuing to create ways to try to maintain things, but then also keep things afloat. And, this is just, something that we just have to pay attention to. So what I have here is the 10-year bond. Okay. So currently the yield is 4.5%. And so, but this is not 5.5%. And so sometimes the bond market has a really good indication of, hey, they think that these rates are done going up. Okay. Well, that means, all right, well, this yield is going to go ahead and start to go down. They're going to say, hey, we're going to go ahead and essentially, let go, or I would say in turns, buy more of these bonds. And then so when people are buying more of these bonds, then that means that the yield goes down. So, for example, if we want to go ahead and write that out, so when investors are buying more bonds, so more bonds, so B, so that's a B. Let's see if we can make that a little bit better. Then that means the yield for that bond goes down. And then so, the interesting thing is, the NASDAQ, Bitcoin, everything is very sensitive to the bonds, especially the shorter durations up to the 10 years. So the 2 year, the 5 year, and the 10 year. And so if I kind of pop up, and the interesting thing is if I pop up the SP 500, something that is incredible to see is every time that, hey, the bonds are starting to go down in yield, what do you know? Capital rotation goes into the market. So look at these green vertical lines, and every time that you see that this bond yield is starting to tip over and go down, what do we see? S&P driving up. Same thing here. Bond yields going down, S&P driving up, so forth and so on. And then so what do we have? Again, the scenario where the bond yields are starting to tip over, S&P driving up. S&P, Nasdaq, Bitcoin, all the like driving up. And so this is, one thing that we really, really have to continue to watch is this movement because essentially we can really use the MACD. And so the MACD is really going to be able to help us understand, okay, capital flush. And so we can take off the S&P 500. And so what I mean by capital flush, legitimately meaning, okay, capital is no longer going to be sitting on the sidelines. Capital is no longer going to be sitting in the things that get a little bit of yield because it's not as attractive as these managers, these hedge funds have to balance these portfolios. These large corporations and companies, they're going to go ahead and go more risk on. And so what we find is a lot of the times when we have these moving averages on the MACD eclipse themselves, then we can go ahead. And it's kind of like a breather, basically saying, okay, we have room for these markets to accept more liquidity. And crypto is very much a part of that. Now, the interesting thing is, altcoins have now come alive. They had not been alive previously in the past, 6 to 8 months, but there's a reason for that, which we'll get into here in a second. And then, so as we are seeing, there's this capital that is slowly, essentially like the way I like to see this, coming out of bonds, essentially, or I would say, the bond yield is going down, and you find the appetite being a little bit more risk on. So we want to see this continue to have a nice flush on this bond yield, and this is actually going to be a really good thing for markets, especially crypto. And so, and it may hold. It may not flush completely down. It may just hold for some time and to be like a slow dwindle, but the biggest thing is we are trying to stop the bleeding. Like, we've been through a crazy long bear market. And then so overall, the reason why a lot of this stuff has room to grow is simply because the sledgehammer is not so heavy, I guess you can say. And so this is something that, we're going to continue to keep the tabs on. But what we can do is put this on the monthly and we get a real chance to say, okay, and we're going back years and years and years. When we have the opportunity for this to go ahead and really tip over. And that means these yields are going down and they stay down, right? So let's kind of draw up some new vertical lines here. So we'll go ahead and get these vertical lines here. And we're going to take, we're not just going to take the last 2 years or the last, 6 months. We're really going to take a lot of these macro pivot points for these bond yields. So for the 10-year, so here, and then let's say, even this here, right, where you have just a macro pivot. So a couple here, and we'll take this one here. So a macro pivot. So we've got, 5 additional data points and potentially one more coming up. And, a lot of people are like, okay, this is going down, but then there was another jolt of these yields going back up. But typically, you don't see, because here's the thing: the longer that we stay at these higher elevated capital rotations, essentially the less time that we have to go through. And so we've been up here for a long time, meaning, all right, time is ticking, capital is ready to flow. And this is a really, really good signal. So, sometime here in the near future, whether that's, March, May, whatever it may be next year, this thing is happening no matter what the Fed is going to say. Money has to get flowing again because we have a thriving economy here in the United States. And so that is something that is going to maintain itself through time once inflation is handled with. And so inflation is really trickling down because as of currently, we're looking at headline inflation at what, 3.2%, and we're looking at core inflation at 4%. And so, as time goes on, we just keep doing what we got to do, and we find ourselves positioned correctly for the time ahead of us, which is going to be easy monetary policy, and that's always a good thing for markets. And so, if we really want to go ahead and take a look at these pivot points here, same thing, and see, hey, what do we find? We find ourselves being able to let liquidity flow. And so liquidity is flowing here, liquidity is flowing here, going up. Liquidity is flowing here after this, going up. Liquidity is sustaining, going up. Liquidity is sustaining, going up. And so, there may be some short term down draws, maybe 2 months, maybe 4 months. But, if we were taking this on an annual basis, these are good opportunities to say, okay, cool. Markets are going to go ahead and propel, and we're going to use these bond yields to help us understand why that is. There's the largest amount of money in these markets here, even more than you find in crypto. So you always want to look at the macro, larger market caps, and then go to the smaller market caps to really see, okay, where does the money end up at the end of the day? So we've got the macro look. Now let's kind of take a little bit more information in as we look at something that I've mentioned on the channel several times. So this is the NDT, so NDTH. And so this represents the NASDAQ 100 stocks above the 200-day moving average. And so typically when we have, this metric really pinning up top above like that 70 line, and we're going up to like that 80 to 90 line, that's like 70 to 90% of those NASDAQ 100 stocks are above the 200-day moving average. And so this is what we call a bull market. These are the phases where things are going really, really nicely. And so what we find is we find like these clusters of where things stay nice for quite some time. We have the weekly chart here. And so if we're just looking at duration, and I'm talking about moments in time where we really don't have anything less than, give or take, about like 50% of the NASDAQ 100 stocks above the 200 average. So, none less than 50% below it, then essentially, we find ourselves in some really, really bullish times. So we're talking about almost 1,000 days here. You have a blip here with these, couple of weeks here, but we found that these NASDAQ stocks came, right back up. You have other time periods like here where, really, really seeing some really good movement, but then just majority of the NASDAQ performing well. So time here. And so these are like years at a time, And so the beautiful thing is every time, we find ourselves go below 20%. So 20% of the NASDAQ 100 stocks below their 200-day moving average. We find ourselves going back like towards a period in time where things tend to be pretty dang good. And yes, you have your blips where, maybe you have a month or two where you have your down draws, but you need that. You're really looking to see sustained, this metric being sustained above this 70 line for, 300 days, 400 days, 800 days. Like this is a good time in markets. And then, so what do we have recently? So let's kind of zoom in. So I call this the round trip. The round trip essentially is, hey, when we get above 70% of the NASDAQ stocks above the 200-day moving average, from there, and then we go below the 20%, then we find our way back up to 70%. So this is what I call like the round trip. So, technically we can kind of, categorize this as saying, okay, cool, boom, we find this down draw going below 20%. Everybody's fearful. This is when we were all buying, right? Hopefully. I know I was. And then we find ourselves back above 70%. So that round trip is generally a really, really good sign to say, hey, the paper hands got out. There's a lot of people that are now repositioned and they're ready to go ahead and potentially even add more to their positions if they find that monetary policy looks to be in line to make easy decisions for them. Large money managers don't like hard decisions. They want the easy decisions. So right now, one less thing to think about in terms of, okay, what are these interest rates going to do? The moment that we find ourselves having a sustained downtrend on the interest rate, there may be some blips, maybe a month or two or some change. We do find the markets react to the interest rates going down, but we're talking about over the years, right? The next 6 months, 12 months, 24 months, we still find ourselves always going in an upwards direction as time goes on. And so, this is a good sign. We had this little blip here, but if anything, this was just a DCA opportunity back in the beginning of, or I would say, more so towards the end of October. And so let's kind of come to this last macro thing because we haven't even talked about crypto. We're talking about macro and what can help us assess, are we risk on or risk off. So we know that there's a couple sectors to pay attention to when it comes to stocks. Yes, we have the SP 500, which is the largest 500 companies in the United States, but we also have the NASDAQ. And then so within the NASDAQ, we find technology being like that higher beta, those top stocks. So we're talking about Microsoft, we're talking about Apple, we're talking about Tesla even. So technology sector is XOK. And there's another thing called consumer staples. So consumer staples are these old darling type companies, Coca-Cola, more of your like defensive type stocks. And then, so one thing that I've mentioned to you guys in previous streams is that this is letting us know risk on versus risk off. So, let's do a little reminder. So we know this is risk on. So let's go back. Let's type this right. So risk on or risk off. Okay. So now, how do we assess this? Basically, if you see XOE, so the tech sector outpacing significantly versus consumer staples, that tells you, guess what, risk on. When you see consumer staples really trying to, people trying to rotate capital back into those defensive stocks, you'll see this metric going down. So that means risk off. And then, so what have we found ourselves in? And I really want to kind of do this kind of year to date since June, or I would say, I'm sorry, January 2023. We found ourselves in a primarily risk on type of environment. And then, so if we want to just, put that line of demarcation right here, January 2023, and Bitcoin even reflects this, is that we've been primarily in a risk on appetite. Besides, this time here between June, late June of 2023, and we'd say maybe like early October. And so, how do we back test this and see if this is helpful or not? Well, same thing. We can go ahead and pop on Bitcoin. So we have Bitcoin here, and what do you know? This chart legitimately plots out what Bitcoin looks like. It's almost almost freaky how we have a ratio from the stock market that is allowing us to see, okay, Bitcoin is following this risk on or risk off environment very, very nicely. And so use this to y'all's advantage when you're trying to say, okay, what is this looking like? Is this risk on or risk off? Here's another little tidbit. And so put this on Heikin-Ashi candles because that'll help you tell momentum a lot better. And then, so, we're looking at a weekly chart and we see a lot of green. Then we start to see things tip over and we find Bitcoin as well stagnating. Capital is just not freely flowing to it to add to its market capitalization. And, there's another dip opportunity before we see, okay, risk on going on for a while. And then, so something that we want to also use to see strength of a movement is we can use the RSI even for a ratio. So we're going to use the RSI, and so we can ask ourselves on this weekly timeline, this weekly time frame, hey, where are we at in terms of this being able to sustain itself? And so this is, why I asked the question, hey, do you guys think that this rally is going to keep on going? Do we have room to do that? And then, so, some may say, of course we do, and some may say, nah, we got to chill out. And so, typically when you find yourself getting towards the 70, 80, on this RSI, this is kind of letting you know, hey, things may tend to temper down for a second. Doesn't mean that's going to be going down as far as price goes, but pumping of any asset has to take a breather. And so this is giving us just a little bit of notice that that may be coming in terms of this environment, people going more towards the tech sector than the consumer staples sector. So, this is a great thing to use. I'm always watching this. And so another thing to add to y'all's toolkit, risk on or risk off. And then, so I have another metric specifically for crypto to let us know risk on or risk off. And so we'll get back to that here in a sec. But let's jump back into the chat. What do y'all think about that info so far? For me, it just solidifies and lets me know we are in a good time and the fireworks haven't even gone off like crazy yet. We're at a time where things have been boring, but we're seeing a little bit of life. But this is just a little taste. Oh my gosh, it's a little taste of what a real bull market looks like. And as we know, the most exciting time of the bull market is really like the last 4 to 6 months, and we've got some more time before we even get to that point. So, with that being said, what y'all got to say? Let's see here. Hey, I appreciate it. I miss you guys as well. The biggest thing that we have to continue to do is accumulate information, but practice it on our own. You don't necessarily I'm all about independence, right? Uh, you don't need somebody telling you what to do every single second of the day with your money, even how to invest it. Yes, you can take other things into consideration, but my channel has solely been dedicated to you guys saying, hey, I want to become smart enough that I don't need five different people telling me what to do. And so, this is a good time. And if anybody's been paying attention, I mean, we've got what over 56 different streams educating you guys on how to think for yourself, think as a savvy investor, and accumulate a lot of knowledge, a lot of information to help you make sound investment decisions. And so, let's talk bribes. I mean, what's going on with that? Is anybody taking bribes around here? I don't know. These altcoins look to be pretty nice in terms of how they're starting to progress in their story, right? Because every chart tells a story. The way that people feel emotionally towards an asset tells a story, and then so people are liking some of the things that are popping off in the altcoin world, and so it's pretty good. Now, one thing that I think is really important is to understand how the cycle is playing out. So the cycle is one of those things where it's kind of been okay, nice jolt in price, but then a long, boring period of maybe for a couple months, then a nice jolt in price. It's kind of been like a stair step. We'll look at Bitcoin here in a bit. Now, this is not anything bad or this is not anything unusual. So, Bitcoin typically takes a lot of the dominance and performs very well at the beginning phases of a new bull market. And just like any type of scenario where somebody makes money, then they say, hey, all of this new money that I've made, okay, cool, I've taken some profits, but hey, I still think I want to go ahead and do some more investing. And so then they creep a little bit more into other assets, aka altcoins. And then they pick the layer ones, then they go into the other things that seem to be trending at the certain time, like AI. It seems like that's kind of taking win this particular bull run, and other types of narratives. Those are going to be the things that get the money dumped into them, and then from there, it's the Wild West. Like I'm saying, the mom that hates you being on your laptop and hates you being on the computer all day, or your wife or your girlfriend is like, why you keep staring at this stuff all day? Even they're asking you, hey, so do you think now I should maybe put $100 in blah 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 coin that my coworker told me about? And so at that time, because we're going to be positioned years ahead of them. Like when I'm talking about like years, because 2025, that's still some time away. And so, we'll be positioned very nicely before a lot of that, last minute capital comes in, and that's where you receive the most gains. But the question is, can you stomach the down draws that are going to be coming along the way? Or are you going to want to just sell, sell, sell every time you think that we get to a market peak? But there's ways to assess, hey, when things are supremely overheated for an overall cycle. We don't have to look at the weekly or the daily. We can look at things on the quarterly basis, and that really helps us understand, especially through a lot of the on-chain data. Okay, at the end of this cycle, hey, there's maybe like a 2 to 2.5 month time period where you want to start to DCA out of the market. And so these are things that this data is readily available, but you just got to know what to use and how to use it when the time is right. And so, let's see if we can dip a little bit more into the info, guys. I hope y'all are appreciating this. If you guys have any type of request, any ideas, definitely put in the chat. Me, I'm an open book, and I really want us to go ahead and really try to advance in positioning our thoughts to get ready for this next quarter, like really the end of the year, but really Q1 of 2024 is going to come with surprises. It's not going to be what everybody thinks. Why? Because it never is what everybody thinks. And then so you just want to be able to put yourself in position to take advantage of whatever scenario comes our way, right? And so let's see what else we got to do and kind of look at here on the chart. So let's actually jump over to Bitcoin and hey, 37,000 and some change. I'll take it. I will take it. So Bitcoin, the story of 2023. A lot of people were very hesitant when it comes to cryptocurrency last November. But if you're watching this channel or just in general watching anybody that knows half of what they're talking about, they would have been able to show you that that was the most advantageous to buy the back end of 2022. So, um, like I mentioned before, what do? We have these moments of where we jump up in price, boring. Then we have a little dump, jump up in price, boring, little dump. And it's kind of like the stair step. That is the theme of 2023. And sometimes they say, hey, life is hard. You can't just take the elevator. Sometimes you got to take the stairs. Well, exactly. This is what's going on here for Bitcoin. So I have a couple things outlined in particular that I want to kind of dive into and talk about. So one thing that's clear to see, and I have this on the daily chart, and let's try to get a little bit more price data here because I want to really start to look at things, like I said, on a longer term time scale versus not just like this week or this month. And so we'll pop this off for a second. And this is kind of just looking at the last cycle. But one thing that we find ourselves seeing is these channels. And so, I've had this channel on here ever since I've gotten the touch points that we needed to form a channel, which is from this point in August of 2022 to about the beginning of the year. So, we're almost talking about, 9, 10 months that I've had this channel here. And what do we find ourselves in? We find ourselves playing in the channel, you know, just like how we played in a much larger channel back here in the 2019 and 2020 beginning phases of the bull market. And so this is the last cycle, and we find ourselves following a similar type of trend, just not as wide. And so, with the channel, we really have a lot of, I would say, overthrows and underthrows, right? And so when I say overthrow, it's saying, hey, over the midline of just the average price, we find ourselves playing above it, and we've had a time period where we played below it. So it's very easy to see, and so something that I can actually do the horizontal array. That's why I have these boxes here, because what do we find ourselves doing in 2023 when it comes to Bitcoin? We spent give or take, quite some time below, right? These touch points. So touch point here, here, and use them as resistance. So we broke through, this is when, Luna and all that stuff with $3 is happening. So a major capitulation, ETH bottom here at this point, but we struggled to get back up above it. So here and here. And then we finally broke through March of 2023. So from a time perspective, right, if we want to look at the duration, so we broke below it here, June, and we finally got back above it and sustained it. That's about 276 days. And so the question you may ask is, hey, how long have we been above this median line? So we'll now use that support not once but twice. And so we want to look at that duration there. And so we want to take it from here, just, to about where price is at now. And we're sitting at about like 250 days. And then so what this is telling me is we spent equal time in the channel above the median price, over this past year, which is just right about $25,000. And so what does this tell me? We've had two tests at this line, at this juncture, where buyers come back into the market and say, hey, no, we want to buy this thing up. We don't see a lot of supply just laying around. And so the supply that is up for sale in the order book, it gets bought. And so with that being said, there's a lot of cause to kind of think to yourself, if you ever do catch Bitcoin below $25,000 again, consider it a blessing from the skies, and you need to throw the sink at whatever asset that you find valuable over the next, 180 to, whatever the case may be, 500 days, give or take. And so, Now, the interesting thing here is as this channel continues to escalate and go higher, we need to ask ourselves, okay, what does liquidity look like as we try to go ahead and break into certain levels? And one thing that you can see just right away is very easy. We don't have to do a whole lot of extreme type of, TA to know that there is a lot of, action that happens, and then so to trek through these portions, especially up top, so let's kind of, segregate. Like there's a lot of action, especially right here in between, January 2022 and May of 2022, almost half a year. And so we've got to kind of beat this portion here. That's going to take a lot of new money, new capital to come into the system to really sustain us above that price. And so, we have the halving coming up. We're talking about less than, give or take, 6 months. And so, that narrative is floating around. But one thing that's really interesting that I do want to kind of mention that I was able to kind of pick out this data, and this is going to be accurate as it gets when it comes to just like the actual amount of buy pressure that that we have compared to the sell pressure. So one thing about the halving events. So the last halving we had was here back in we're talking May of 2020. And so something that everyone needs to understand is that sell pressure, especially from the miners, gets split in half. So let me write that. And so why is the sell pressure getting split in half? Why? Essentially because let's not do that. So we need to go and I need to grab. Let's see. There we go. Text. So sell pressure. So sell pressure gets cut. So cut in half every halving from the miners. Why is because the reward gets cut in half for the blocks that they mine. And then so one thing to just make note of, on average the monthly, so let's go ahead and so the monthly sell pressure for BTC currently is about $1 billion. And so what does that do? If this gets cut in half after halving, so after the halving, it's reduced. So reduce to 500 M. All right, so let's change these colors up. All right, cool. And so the next halving here in 2024, we are seeing $500 million less on average sell pressure. And so that actually does have a fundamental change to the price action for Bitcoin. And so, that's actually a really good sign. And so this is something that we're expecting sometime in April or May of 2024. So we're getting close. And so just keep that in mind. Those two little tidbits, I'll keep them here until the halving, and we'll kind of continue to talk about this as we get closer. But this is something to think about. Now, one thing that we find is at some point we do break the channel. And so you got to ask yourself, at what time do we have the inertia to do that? And so, one thing that we can also kind of ask ourselves as we get closer in the upper portion of this channel is, okay, hey, what does it look like in terms of liquidity? So what I did was I took the liquidity specifically from the time period of when we have broken above this midline of 25K. And so, what has the volume weighted price action look like through these past 6 or 7 months? And what do we find ourselves is we're at a very interesting point, is where there is a big cavity, basically saying, "Hey, we just bust through this right here." And then so one thing that we have to just keep in mind is this cavity here makes it very easy to go back down through it. And then, but we do have a lot of support. When I mean a lot of support, we have plenty of support. If y'all look at that cluster there, in between the price points of, we're looking at, give or take, about 31,000 bucks on down to, like we're talking about that 25K. And then, so like I mentioned before, if we ever just randomly happen to find ourselves below 25K, you have another chance to allocate and feel pretty good about it. Because, one thing that I've said, here on the channel, like my rule is once Bitcoin is sustaining above 40K, like not just kind of, wicking above it here and there, but once there's like a solid month and a half, 2 months above 40K, I am done investing. That means my bags are packed. I've done everything I needed to do. And now I am just going to go ahead and enjoy the ride. And what does that help me with? I feel like that helps me to not chase, because I'm telling you, it happens to a lot of new people. And just in general, you start to see these prices go up, you're going to want to just keep adding more money, keep adding more money. And what you end up doing is raising your cost basis. And then, so that's something that you want to refrain from doing. So, what do you need to do to get those gains? Just get in early and get in hard, right? And so that's what we've been able to do over the past, really almost like 400 days, right? Because we're talking all the way back from, June of 2022. So I mean, we're talking about 500 days to really DCA and take advantage of the accumulation range. And so we're starting to leave that accumulation range. And so, something to think about. And so one thing that we can also do, we'll do a fib from this move here. And what I kind of want to do is just look at, okay, a little bit more tighter data. So we'll take that fib from this last movement up, and, where do we find ourselves? So let's take the channel out for a second. Let's zoom in. And one thing that's pretty interesting is, we kind of seen this thing form just like a little bit of a parabola. So can you guys see this here? So this parabola just trickling up. Now we broke it, but yesterday, or I guess, or it depends on where you're at. So either, earlier today for you or yesterday for you was a really, really explosive day, engulfing green candle that said, nah, we're not dipping. So the bulls are strong. And so, this is something that we want to continue to monitor, but we do have some local support here about like 35K. So if you're a person saying, hey, I'm not going to use any metrics, or I'm not going to use any type of TA, I'm just trying to just go based upon price, and you feel like you're itching to get into the market, there's a lot of supply here in between like that 34,500 range to about 34,000 range that, you may be able to DCA into something, especially if Bitcoin is on that downtrend. But the interesting thing is, there's alts that are just kind of popping off at their leisure, even if Bitcoin may not be doing the exact same thing at the current time. And so, this is something to think about. So before we get into the alts, and for me, kind of, what I'm being cognizant of is saying, okay, what does this look like in terms of, right, momentum? So we're going to use these Heikin-Ashi candles, and the momentum is really showing us a lot of wicks to the upside. And so I know price is going up, but anytime that we have considerable amount of wicks to the upside, it does not seem to last for like another month or two, right? And so, if you want to take a look at this time period, we see a lot of wicks on the upside of, the Heikin-Ashi candles. Things tend to stall out, and we're giving ourselves over the next, 2 or 3 weeks. And so, the S&P 500 has had a nice recovery. The NASDAQ has had a nice recovery. If we're just looking at things from a holistic standpoint, it only makes sense for this to kind of chill out, especially us being more so at the top of the channel, how I kind of depicted for us earlier. So same thing with a decent amount of wicks all throughout, this increase. And so, and we may be surprised, we may see Bitcoin try to test up here at this upper portion of like 38K, 40K. But nonetheless, are we going to see all-time highs here in the next, month? Very unlikely. And that doesn't necessarily trend with the rest of how the cycle goes. So how the cycle goes, which we can kind of really start to picture as we continue to go through the information. So that's Bitcoin in a vacuum. Just hey, Bitcoin's doing great, but now we have altcoins doing great. So, but why is Bitcoin, kind of pressing and causing this bull to action? And all we got to do is to kind of take a look at some of these liquidation points. And so there's been a lot of shorts that have been squeezed. And so one thing that helped us kind of pop up very high. So right here is a website called coinglass.com. I highly, highly encourage you guys to start to come over here, learn, try to understand how to read an order book and understand that leverage is such a big part of investing. And so when leverage is coming back and throws, like, this is the lively market that we all like, especially when it's going to the upside. Leverage is a tricky thing. If you don't know how to use it, I suggest you stay away. But so we had a beautiful short squeeze, as you can see. There was, during certain times, over $100 million that got squeezed out. So, you want to take a look at this day in particular. You have an amazing amount of shorts that get squeezed and be able to push price higher. And so that happened here in between like that 36K range up to like that 37.5K range. And so now we're here on, this is like a 3-day chart. We can look at things on a larger scale as well. And then so this is the Binance perpetuals, right? So this is where a lot of people go ahead and take their leverage. And interesting thing is that one thing that we have to kind of keep in mind is that and why I'm saying, hey, we may chill out here for a second is because what we find ourselves is that this liquidity that sits. And so here, these yellow bars here, these thick yellow bars here, typically liquidity likes to get attracted to it at some point in time. And so as you can see, this isn't just in the past, it's stretching out all the way to current price data. And so this is even sitting here at about like 34K. And so as you guys remember, we have a lot of support and supply here, just right between 34.5 and 34 flat. And so just don't be surprised if we find ourselves having another opportunity in DCA, maybe over the next, month and a half, potentially at a lower price. But if we go a little bit higher, markets are unpredictable. Nobody can tell you where it's going to go tomorrow or next week, but we're going to look at the probabilities of how these things are going to unfold. And so that's just something simple. Just looking at some of these liquidation levels. Now, let's see. Let's see if we can get a little bit more information. So, all right. So liquidation heat map. So heat maps are very helpful to say, okay, what in particular is getting leverage long and being liquidated, or liquidated on the short side. So AVAX, a lot of these shorts look to be liquidated, right? So let me see. So liquidations, it had six, like, because this is how you understand, hey, why did this randomly pump up today? There was about, and we're looking at about 630, what is that, $1,000? That's a decent amount of shorts being liquidated for AVAX. And this is in the last hour, right? Let's look in the last 24 hours. And so, yeah. So for example, yeah, there's a lot more shorts being liquidated. We're talking about 3.6 million compared to longs, which is only about 900K. And so that's why you see the price pushing higher versus lower. It's because these shorts are being liquidated. And so if this is showing you all red, this means a lot more shorts are being liquidated than longs being liquidated. So that's kind of how you can go through and read that information. Cool. So coinglass.com, really, really helpful site. Now, another thing that we need to talk about, momentum. And so RSI is something that we can use, the strength of a move, and we can look at this over the last week. And then so this is going to basically index all kind of coins. And so, you got to do a little bit of work to try to see if you can find some of the things that you're currently holding to see where they finding themselves on the RSI. But one thing that I've been doing over the past, 3 months is checking this on a weekly basis and say, hey, where is this average RSI? And one thing that is going to start to show us, okay, these bullish moves flowing more so into the alts, because now for the first time have we found ourselves, and I'm talking about in the last 2 weeks, have we found ourselves this average over 50%. And then so this is meaning, hey, alts are now coming alive. And then so we see things such as, let's see, uh, time out, where to go? Uh-huh. All right. So we see things such as what? Fetch AI, incredible week it's having up top, but guess what? It's overbought. So same thing. Asking yourself, when should I DCA? Should you DCA when things are extremely high on this RSI or when they're undersold? And so venture to say, you may get a better deal if things are below this 50 line on the weekly RSI. So you still have things like dot below the 50, or I would say this average 59 mark here. You've got a lot of things in here. So it's really just kind of on you to just kind of see, okay, the more dots that you see above this line, you're kind of getting the sentiment gauge of like, okay, we're really in a bullish territory versus, what this looked like. I'm talking about 6, 8 months ago, where a lot of these alts were way, way low. They weren't even neutral. They're in the weak and oversold position. And then so this is letting us know that these ships are rising, and this is a positive development for altcoins. So, since we're on the topic of altcoins, I definitely want to hit you guys with this way to assess risk on versus risk off for crypto in particular. So we move on to the next chart. So what we have here, and I'll go ahead and take that off for now. So what we have here is the total three. So this is the market capitalization of all the altcoins within crypto, excluding Bitcoin and Ethereum. And so, one thing that is easy to see here, just draw an easy trend line. And so this downtrend has broken, like I'm talking about, we've broken this here in the last few weeks. So this is a very, very nice development. And you start to see coins go up 20, 30%. And I'm talking about, layer ones or gaming tokens or, coins that even have a decent market capitalization like Solana getting 20 to 30% increases in a day. And so this is something that hasn't happened this whole entire time that altcoins has really been in a bear market, right? Because you've seen the market capitalization, hit a low, and it kind of have like a little bit of a double bottom, even in June of 2023. So this has been a long, I would say depression slash accumulation phase for the altcoin market. And so one thing that you need to ask yourself, hey, when do altcoins slow down potentially, or what does it look like for altcoins to pump, right? You're going to take a look at it, just a general fit. So there's levels to this, right? There's levels to this thing. And so, we're finding ourselves just breaking back above the 236 level. And so we got rejected here, here, and then so we finally broke through. But the cool thing is what we find ourselves, and this is the daily chart, we use it as support the other day. So that's a very positive development, overall. And so as we ascend through these fib levels, we really want to say, okay, what is going to be the exciting time. And so what I also did here was I grabbed, same thing, another volume profile, so a fixed volume profile, specifically just from the top to price currently. And what do we find ourselves? Hey, a lot of people have repositioned, right? You don't see these bars sticking up as high or as I would say as to the left to the side here as you do here at this lower region. And then so this says altcoins have positioned themselves. And the beautiful thing is we have a nice gap. So you see this gap right here. And so this means, all right, this has an easy availability to be able to push to this higher range. So what we are looking for altcoins to start to break and sustain $480 billion. Once like the altcoin market can do that, it is going to shoot. When I mean shoot, it is going to shoot directly, just about another $100 billion very easily, right? And we've seen that several times anytime that we pulled out this volume range profile. And so that is the exciting time that you really want to position yourself in the alts that you want before, we find ourselves above $480 billion for the altcoin market. So, and how do you know, okay, bull market is getting very excited, obviously, when the altcoins are going back towards its highs. But really, when we go ahead and break this golden ratio, this 618, if we find altcoins sustaining above, right, the market capitalization of about $668 billion, guess what? Here's when the fun starts. But this is going to take time, right? We're going to find some ebbs and flows, but we are approaching where that liquidity is very thin. So we might have an opportunity, and like I said, I can't tell you when this is going to happen, but this is, going to be able to be an option when monetary policy starts to loosen up even more. More assets will start to see these pops, and altcoins have finally become alive. So this is exciting. So now, one thing I want to kind of give you to take home and use this after the stream. So this is another ratio. So if you guys remember how I was showing you the tech sector versus consumer staples, now we can do the exact same thing for altcoins. So total three versus Bitcoin market capitalization. And so what we have here is a story. So if we kind of trek back over to 2018 and 2019, we find ourselves when altcoins severely outpace Bitcoin, and then it hits a nasty, nasty bear market where they just get wrecked versus Bitcoin in dominance, in market cap, and then they start to trend back up. And then so what we're all searching for, that exciting period, as I keep telling you guys, it is a very short time when altcoins are ripping way more than Bitcoin. And then so we're talking back even in 2017, right before this bear market. This time period was all of like 69 days, where the altcoin market capitalization went up 350% versus Bitcoin's during that time period. Now that's a big difference now, because we're talking about market capitalization. We're not talking about percent of a coin going up. And then so understanding that the altcoin market capitalization at this time was severely lower than Bitcoin's. So that's an incredible move. But one thing that we find is that same type of move happened even with more liquidity, even with more people, knowing about these altcoins. The excitement was still about a 3-to-1 improvement on the altcoin market cap versus Bitcoin's market cap. So 3-to-1, and this is only about 136 days. And so this is the move that you want to position yourself for before it happens. So something like this is very exciting to be a part of. You don't want to be someone that's trying to get on it halfway through or at the top. Definitely, you want to be somebody that said, "Hey, I feel like I'm allocated strongly enough to be able to get this whole move of these alts very much outpacing Bitcoin." And so this is what I call the altcoin rips versus BTC. And so where do we find ourselves? So if you notice, we find ourselves in another channel. And the biggest thing is now this 2022 and 23 bear market, so 2022 and 2023, has told us a story about altcoins. They have fared way better than what they did in the last cycle. And so, not every single altcoin just went to zero, right? We've seen a lot of them recover. And then just in general, there's a lot more money still sitting in altcoins versus what happened in the last cycle. And then so, this is actually a really, really good thing. This is meaning that a lot of these altcoins are not going away. I know many people are with the sentiment saying, hey, 95% of altcoins die every single bear market, but that simply is just not the case. There's going to seemingly be quite a few altcoins that stuck around from last bull run that are going to still be here and do their thing in this bull run coming up here. And so we find ourselves sitting right here at the halfway point, and we're kind of just bouncing. And so what we want to find ourselves in a position is where we see this start to slightly trend up at some point in time, right? So what we're looking for is a time period like this, right, where we're slowly trending up versus Bitcoin. And so this here is, if you can guess, Bitcoin is shooting up, and then the alts say, hey, no, it's our turn again, and we go ahead and see alts really go off and have a lot of fun there. And so the biggest thing is we need to stop the bleeding. So we need to refrain from this altcoin market capitalization just getting killed by Bitcoin's market capitalization. So as long as we can get some type of baseline, right, some type of evenness, this is actually a good sign for altcoins. And then so these couple jolts up is a positive sign. And then so we want to see a move of this, doing something through the years, right? Going into 2024, 2025, something like this. And it would be very, very nice to go ahead and break out of this channel now that, so many people know about these altcoins, even compared to 2000 and 2021. There's going to be a lot of eyeballs coming up here. And then so I'm really expecting for this ratio to break out of this channel. And that's going to be an exciting time. And so, who's to say we may get another 300% plus or 3-to-1 ratio compared to the Bitcoin market capitalization when these things really pump. So, that may take us, somewhere, up here. And so that is going to be an exciting time. But even if we even get back to the top, right, that's almost like a 2-to-1 on the Bitcoin ratio. So, like, what does that mean? So, for example, if Bitcoin's market cap goes from, we're talking, and we may be able to just look at it currently. What is Bitcoin's market cap? So let's go to CoinGecko. And so if we get like a 3-to-1, so Bitcoin's market capitalization is $700 billion, give or take. So let's say, for example, we get to the point in the cycle where the Bitcoin market capitalization goes to, 2 trillion bucks, right? So at this point in time, if it's going to be going up another, let's say, $500 billion during that time, the altcoin market is going to be going up 3-to-1. So 1.5, and that's 1.5 trillion, right? And then so that is something that easily happen, especially on those later parts of the overall bull run, and that's gonna get us to overall we're talking about 5 trillion, who knows, $7 to $8 trillion total crypto market cap, and then so that is the jolt that you want to be a part of, and that's the amazing euphoric time period that we're all trying to position ourselves for. And then so great metric, really take advantage of it, and you can see yourself enjoying one of these altcoin rips, as what we call it here. And so good stuff. All right, let's take a small little break. A lot of information. If y'all have any questions, hit me up in the chat. Let's talk. Let's see. Hey, Crypto Sloth, what is going on? How's life, man? See if I can get that shot up there. Yo, yo, yo. Okay, so I sold Phantom and Gala some months back when they had drama, but now I need to get back in. Hard thing to know is how low they can go when they start free falling. And boy, oh boy, do I have something for you that will help you with that info. Stay tight, sit tight, and we will answer that here in a second. Jesus, yes. And like when I look at that ratio, um, it excites me. It very much excites me so much to essentially see altcoins alive like how we have them. And so, same thing, risk on, risk off. And it's a great way to let us know that, hey, we are entering into that risk on time period. So let's go. And hopefully it can sustain itself, and we're talking about through the years, not the months. We'll see what happens over the next few months, but we're talking about 1 years, 2 years. Cool. Such great info. Can't believe this is all free. Appreciate all the knowledge. Look, I don't stream every week. I don't even stream every day. But when I come ready, I come prepared, and I want you guys to really feel confident. Investing is a confidence game, so this information hopefully can help you all go about this in a little bit more of a tactful way versus being a deer in the headlights and say, oh, dang, I missed it. None of us want to be that person like, dang it, I missed it, right? So do what you got to do. Go get that fiat, and learn to assess risk while you're going into this market, and you'll find out that you're gonna do decent. Now I'm saying decent is because that's only half the battle. Because a lot of people don't know how to take profits. or they think that things are going to keep going up forever, and that's just not going to be the case. And then so, to do great, you've got to have the other skill set of knowing that, hey, I've allocated enough. I can sit back and watch. And then there's a portion to where say, okay, cool, let me DCA out the market. Okay. Um, or you may just say, hey, let's just rock and roll for like 20 years or 10 years. Don't sell anything. And I mean, really, that's how you really, really get the gains. People that have held Bitcoin from, 2011, 2010, and, we're talking about whales that are just now selling, right? And this is on a dip. These are people that are still up, you know, we're talking 400x, 500x, So, if you want to play the long game, there's nothing wrong with that. That's ideal, especially even if you've ever invested into anything else outside of crypto, that's normal. Waiting 7, 8 years, 10 years for a really nice return. So cool. All right. So we'll end with a couple things. We're gonna end with some on-chain data, and as I mentioned before at the beginning of the stream, I have been doing a lot of learning myself, being able to use PineScript on TradingView to use a lot of metrics that I like to use and put it all into one to tell me, hey, does this work out for a DCA or should I wait? And vice versa. Are the markets getting overheated? Maybe I should take some profits. So, I'll pop that on here in a second. So I have two indicators I created that I'll go ahead and share with y'all today. Question. So, do you use the SRI? I'm assuming that you're saying RSI graph on CoinGlass to help you decide when is a good time to DCA into alts. Not so much on CoinGlass, but what I just mentioned. That is what I do use. I mainly am going to use on-chain data to tell me these DCA time periods, but I kind of extrapolated that and I made some stuff to just go straight on to TradingView. And so, like I mentioned, probably 3 or 4 times now, we'll go ahead and look at that towards the end of the stream. Cool. All right. So let's jump back in. So now we're going through the cycle. People are feeling good. So people are making some money. Okay. Now what's next? That's always the question. All right, where to next? As we trek up the mountain, the journey is a tumultuous journey, but it's one worth going on. One thing that I always love to keep in frame is to understand where the net unrealized profit and loss is at. So where people holding their bags. So this is not realized. These people are saying, hey, I'm in unrealized profit or loss. So, this right here alone told you or told us per se that, hey, when we're here in red, we are in extreme depression. This is capitulation. You need to be doing whatever you can to trade that fiat that's not going to get you anywhere long term and get into an asset that's going to help you out. And so this let me know soon that we cross this level here in June of 2022, it's time to rock and roll. Let's start this trickle in DCA. And so the best part of trickling in your DCA is you don't have to guess. You don't have to feel so much pressure to put a whole bunch of money in at once and maybe make a mistake that messes up your cost basis. You can do this through time and let time be your friend. So there is like, I don't know. I felt like through this time period, the last year and a half, I've DCA'd 40 or 50 different occasions. It's been beautiful. And so, as prices trickled up here in 2023, then we now approach that hope where it's just like, okay, we go into the orange. And so let's kind of zoom in here. So we go into the orange and say, okay, there's a little bit of hope. Bitcoin trekking up towards 25K and above 25K, there's the optimism. So we're still in that optimism range. Now, the biggest thing is that we have to kind of keep in mind is we have this time period similar back in 2019, where things got very extended very early on in the cycle. We had the lows of the cycle in January of 2019, and as soon as July, so we're talking about 7 months later, we're already in that belief phase where there's a lot of people sitting in profits, and then so this movement was extremely fast. Now, what do we find ourselves doing now? From November of 2022 to November of 2023, we're getting almost towards, guess what? This almost that, oh, there's this belief, things are looking pretty good. Are we going to all-time highs in the next month? Some people are starting to try to, float that narrative. Now, duration is a thing. This happened very quick, 6 months. This took two times as long. So, yes, it's like a wave. Just use the natural elements to really help you learn about investing. This big rush of capital in, guess what? Makes it very easy for capital to rush out very quickly because of this move being so quick at a very early stage in the bull market. Now, this being just as bullish per se, it took two times longer. I'd rather it take two times longer versus being very quick. So what does that tell me? The risk premium to the downside is not as significant as what it was in previous cycles. So us seeing a drawdown of what Bitcoin went from 10,000 to and let's say COVID was not a thing, right? Let's say COVID was something that did not happen. Not saying that we want to take off real data, but for example, if we did not have a black swan event, if things were just normal, regular market cycles, the worst part of that down draw after that move was to $7,000. So that's about a 30% reduction. So, what's in line for potential downside risk, right? Since we didn't have such a large rush with quickness up to the price of 37K, I think this really gives us a lot of plausible thought process to really think that a 30% reduction may not necessarily be the cards, right? And I'm talking about no crazy black swan. So if we get a recession, and you have people reacting to someone calling a recession officially, that's another thing, right? But if we say, hey, things are just going to continue to float how they're floating, interest rates are coming down at some point, inflation is coming down, and we find ourselves that the risk on premium is starting to get higher and higher, then a 15% drawdown, a 20% drawdown, but I wouldn't find ourselves in a drawdown that would be more than 30%. It just is not showing in the data currently, right? Now, things may change, but we're going to wait to see that. So a 30% down draw for Bitcoin looks like what at current prices, and this is us. I mean, even if we pop on the RSI really quick, so let's look at the RSI. We have the daily. So yeah, we're overbought on the daily. Now on the weekly, what are we looking like? We're getting there. We're overbought on the weekly. And so a 30% down draw from here. And we're talking worst case scenarios. I always want to prepare for the worst, but hope for the best, right? A 30% down draw, guess what? I promise you, I did not, practice this ahead of time. Like this is just, all right, cool. Let's use these multiple things to help us understand what's going on in the grand scheme of things. It's telling us the same story in the on-chain data. The 30% down draw will be just back to that 25K range, right? Where we have the most support. And so, with that being said, if we get that, consider yourself lucky. You know what to do. I'm not going to tell you, not giving you financial advice. But hey, but the likelihood of us dipping below that, it's looking slimmer and slimmer the longer that we stay above it. I will say that. And so the more relevant that becomes. And so let's jump back over. So we're still on this topic of capital rotation. Okay. So one thing that we do know is the Bitcoin dominance is really doing its thing. We're talking about 52%. It had gotten up to about 55% a couple of weeks ago. Before the alt said, "Hey, hold my beer." And so the capital rotation of the ETH Bitcoin ratio is something to pay attention to. Is where and what we can do is we can use the past two cycles for Ethereum and say, okay, what we find is this ratio tends to get beat up. Basically, Bitcoin very much so outperforming up to a certain point. And then so you kind of see these crescendos or these pivot points. So for example, we look at here, right? But more so, let's try to look at after a bear market, right? So if we want to look at after a bear market, we really only just have this data here. So after the bear market, we find that the ETH BTC ratio did not necessarily do good. So here in red, it did poorly, right? For a good amount of time. And then so this time period is about 300 days. So, we're looking about December 2018, to almost right there. So December of 2019. seen before. So we've seen a double bottom and then go ahead crescendo and then start to outperform. And Ethereum is now leading, this upwards trend, right, for all of crypto. And so that's something that what we're finding is this is kind of going with that same type of inertia, with Bitcoin really just outpacing Ethereum. And Ethereum is, it's doing okay, but Bitcoin is the main thing here. And then so we find ourselves sitting a little bit over 350 days, where BTC is still out front. But the biggest thing is, what do we find ourselves is right after this crescendo, then we see Ethereum start to make higher highs and carry itself forward into really, really leading in dominance, for the rest of this cycle. And then if Ethereum is pumping more than Bitcoin, then a lot of these alts are pumping a little bit harder than Ethereum during this time. And then so, this first like 25 to 30% of the bull run, we find that Bitcoin is going to do what it normally does. But the exciting time is going to be the remainder of this bull market. And so this is when we can kind of look at same thing, capital rotation favoring more Ethereum than Bitcoin, especially from those large whales, those large players. And then so what do we want to see? We want to see this metric, essentially start to trend back up. And that's letting us know, okay, this bull run is really starting to get some legs, and then we can sprint. And that's going to be the exciting time period that we're all looking for. Another thing that I do want to look at is, okay, so we're going to look at the realized value net capital change breakdown. So let me go ahead and break this down for y'all. So here in orange, guess what? That's Bitcoin. Here in blue, that's Ethereum. Here in green, these are the stable coins. And so everything happens in phases. So we have the information from this last bull run, the two peaks. And what do you know? You find, in this value being derived into the market, Bitcoin is going to be taken off first, right? And then what do we find? Ethereum starting to gain some steam. But what we find is, so Bitcoin in October of 2020 said, all right, let's do this. Time to go. Liquidity is coming back and it ain't coming down, right? And then we find what, a month later. So 1 month later, now Ethereum starting to kick up, and then also the stable coins. And so the interesting thing is, as liquidity starts to really pump for Bitcoin, you still see Ethereum now. So this is what we call a divergence. Now, when Bitcoin says, okay, all done, time for liquidity to go into something else, we see Ethereum still pumping and going up. And so, this is, what we want. And like I was mentioning before, especially with the alts, and you also see the stable coins start to come into the market and get a larger market capitalization. This is when the best part of the alt season is occurring. So for example, March of 2021 was, pretty dang impressive, to May of 2021 for a lot of alts if you want to go check the chart. And so same thing here on the back end, where we find, okay, Bitcoin is done. And then you see the rotation following Bitcoin. Now Ethereum starting to come up and really starting to grab some of that dominance as well. And so same thing is true. Bitcoin, then Ethereum, then alts. And then, because as you can see, then stable coins come back up. And then 9 times out of 10, people are going to exchange those stable coins, because think about it, they're taking profits into the stable coins, and then they reallocate them into some other type of altcoin. And then so what do we find ourselves now? Right? In a beautiful time period where, yep, Bitcoin is leading, Ethereum is following, but now, this green line, and, this is stable coins, but I like to see this in my mind as the altcoin market capitalization really starting to bubble up above the midline. And so that's why, if you really want to, kind of make things in somewhat of a precise fashion, October 20th, 2023. So y'all see that? Let's go over to the total three. And let's see if it tells us a story, right? So October 20th, 2023. And I kid you not, I'm not going to make this up. This is just data. I'm not giving you a whole bunch of I think, I wonder, I hope data, boom. From that point right there, I mean, it really doesn't get better than this. You start to see the altcoins go, right? Beautiful. And so on chain data is very helpful in this fashion, right? And so these are those green bars accumulating higher and higher. So this is a good sign, great sign, matter of fact. All right. And so, that's the on chain data. I got one more thing for you. So the cycle. So we need to understand, hey, where are we at in the cycle? Next question to ask. Okay. So we have this information here by the Rational Root, and he does an amazing job. I really encourage you guys to go follow him on Twitter. I don't suggest a lot of people to pay attention to, and don't go to anybody to tell you to say, hey, what to buy and when to buy it, unless you need it, right? But if you say, hey, I feel like I know enough, you really just want to ask yourself, hey, where are we in the grand scheme of things? And you want to look at previous data to give you some not just reassurance, but a little formality of just how things typically go. So, we have the two previous, Bitcoin cycles or periods between halvings, right? And so here in orange, dark orange, and then here in light orange. And then currently, right, we have, where price is today in this like pinkish red. And then so we find ourselves just, right under 6 months towards the halving. So one thing that is typical is that we find ourselves right on top of the short-term holder cost basis. And so that's something that we could actually look up, guess what? On Glassnode, on chain data. So a beautiful thing. And so, one thing that's, pretty impressive is yes, we're trending up, but we have not come up as high as what we did the last cycle, right? But we are just, finding ourselves smack dab sandwiched in between the last two cycles. So we're in a good space. This is not a space that's like catching me by surprise at all. And we find ourselves just trending up slightly, maybe to flat over the next 6 months, right? You kind of want to look at where price is at 37K. That's, up slightly to flat, Now we may pump up a little bit up before it and then kind of down draw into the halving. But the thing is, when do things get exciting? And then so when do things get extremely exciting? Well, when does this arc really start to go up on a parabola? And then so from that halving, so right here, and you start to count the days, that really starts to get exciting. You're looking at 180 days after the halving. So if halving is give or take, let's say April or May of 2024, what are you doing? You're thinking about 6 months after that, things are rocking and rolling. So we're looking at fall to winter of 2024. And so signal of distress, do as much as you can before the halving, and then watch the magic happen. That's as simple as it has to be, right? And then so it's kind of letting you know, hey, these bear market lows seem to be sustaining themselves, and we're getting close. We are going through this cycle, and we're getting very very close to this halving. And then once the halving hits, we really only have maybe about an additional year before we say, hey, party seems to be getting very overcrowded with this trade. Time to start taking profits. Okay, so those are just a couple of general rules, right? 6 months before halving, do as much as you can before halving, and then a year after the halving, maybe a time to consider to de-risk yourself at some point. Cool. Okay. So the last thing I want to share with you guys before we call it a night or call it a day, wherever you're at, or if you're catching this on a replay, is what can I do to help my DCA decision making? All right. So let's pull up an altcoin. Something that I've been accumulating very nicely over the past year and a half is Phantom. This is a coin that I see to have a nice upside, and it's not something that is brand spanking new. But at the same time, I know that it works. It has proven to me that it does work, even though there's been some bumps on the road. So let's see if we can get the chart up for Phantom. Let's see. Let's do USD. But this is not the whole chart. Let's see if we can get something a little bit better. Matter of fact, I know I got it on my watch list, of course. Here it is. So we're sitting at 33 cents. Okay. So now, typically, what have we talked about on, ways to DCA? We talked about using the RSI on the weekly. Now, one thing that I've been able to do is basically try to pinpoint ways that I like to DCA. So I like to look at the Heikin-Ashi candles first and foremost because it tells me momentum. So the indicator that I made is based upon certain metrics being met and conditions being met when we have down draws or uptrends for the Heikin-Ashi movements that we have within these candles. Okay. So what I will do is I'll go ahead and pop it up for us. And then we can even put this back on a regular chart. So boom. Okay. So here we have the weekly chart. And to put it in short, what does this do? Here we have the 200-day moving average. So this indicator, it literally does not permit you to do any type of investing once something is above its 200-day moving average. And like I said, these are metrics that I built for me because I find that if something is above its 200-day moving average, it's not on discount. And so this is a beautiful thing because it uses the down draws of the Heikin-Ashi movements. And then when you find that first jolt of liquidity after a sustained period of time, it gives you a nice buy signal. But one thing that you notice, it keeps you away from buying these local tops, right? So no, I never found myself buying anything up here or up here. And currently, I feel like I don't need to DCA in the Phantom because, I had, four really good opportunities, and this is the weekly chart. Now you get a little bit more data the lower time frame that you go into. So typically, I like to use this on the 3-day and the weekly chart. So the 3-day is what I actually made this indicator specifically for, right? So the 3-day chart, and what do you know? It has given us several times to DCA, and so as I mentioned before, you stay away from buying these local tops and you scrape these lows, the base and level of this accumulation range very, very nicely. And so, it's very easy to use because what I like about it is all I have to do is once I have this up, I come over here, press the three dots, I just add an alert. And then so it's going to let me know, hey, anytime that I find that the Heikin-Ashi, right, has turned green, and so basically the metric has turned green for me, it's going to give me an alert. And then I'll say, all right, whatever, buy. So buy Phantom. And the biggest thing is in your notification. So this is how to automate your investing. I don't know if anybody has like dive deep into kind of showing you guys, hey, what's an easy way to invest to where you don't have to watch this stuff or have somebody tell you every single day, is this thing overbought or overpriced? Let the code do it for you, right? Create your framework and then be able to set some alerts to just notify you, whenever you're at work or when these things are getting hit, you already know what to do. And then so you really want to make sure that you have this send email to SMS. So it's going to go to your cell phone, right? And then so this is a beautiful thing because I get a nice text, when any of these buy signals hit for this asset on the 3-day chart. And then same thing, you can do that on the daily if you want to. If you say, hey, maybe I'm a person that, I want to invest a little bit more frequently. And then so same thing is, still to kind of explain a little bit more about what we're doing here. This is just really meant to keep you from doing what you feel like you want to do all the time. Because I know when prices are pumping, I always want to be like, let me just put a little bit more. All you gotta do is use something like this, and it's gonna be like, nah, cool out, chill out. Now is not the time to do that. Wait for things to settle back down, and even on the daily, it's going to give you those opportunities. And so, very useful. And then the question is now, how does this help me for the macro tops? So then you can go ahead and now go over to the monthly, and this is good for any asset, right? And what do you know? It does a good job of letting us know, okay, the party is for sure over. And is this going to give us the exact peak? No, it missed it by 1 month. But this is letting you know, hey, if you have not taken profits by now, something is wrong with you, right? Like, the trend on a Heikin-Ashi standpoint is overwhelmingly turning over. So you need to take action, aka potentially sell if you are, using the metric like this. And so, this is super helpful. It's something that I find to essentially create a good framework and help you execute on the things that you want to do without having to do too much guesswork, right? And so the other thing that I had a chance to make, because something that I really love to use as far as a sentiment check is the fear and greed. So I'm like, dang, there's a fear and greed for Bitcoin. Nobody's made the fear and greed metric for the altcoins or anything that I'm holding. How about I go make it for myself? And so, like just like this metric, there's conditions, right? And then so what we'll do here is we'll pop on fear and greed for Phantom. So pop this RSI off, and we will pop on the indicators. I'm going to go to my scripts, and boom. Let's see. And so why is this data showing to me? Oh, well, what we got to do is put it on the chart. Here we go. So on the monthly, it's not going to give you the data, but it should give you the data on the daily. And I believe anything between the daily and the weekly, correct. So ideally, this is something that you want to use on the daily, or for example, the 3 day, right? If you find yourself thinking, is this thing pumping hard? Should I add a little bit more? Come back and look at this here. And then so what I did was I have these two metrics. So the fear and greed is between 20 and 80. And then anything above 80 is extremely, greedy, and anything below 20 is extremely fearful. I remember during the bear market, I seen the Bitcoin fear and greed at like 7, 8. So, just that alone told me what to do for, other coins that I was looking to accumulate. And then so what I did was I was able to kind of code within this a 100-day look back. And so what it does is a 100-day look back basically gives you the average level for the metric over the past 100 days to plot here on the chart. And so, for example, if I'm thinking about buying Phantom today, this clearly tells me I'm way above 80. We're looking almost at 92 on the greed level for Phantom in particular. I probably want to wait. And like I mentioned before, this orange line here is that 200-day moving average. It legitimately stops you from buying above the 200-day moving average. It's like, nope, we won't even show you any type of opportunity above the 200-day moving average. So that's, like I said, going to help you out and ensure that you're not buying local tops. And so, on the buy side, you're looking at what? The 3 day, the weekly. On the sell side, you're looking at the monthly. And like I mentioned before, you can do this for any asset. You can look at something like, I don't know, Apple. So something that's not even crypto. Crypto, excuse me, I said crypto. Something that's not even crypto, right? And on the monthly. And what is it doing? It's giving us really good opportunities to DCA out of the market, right? Local peaks, right? And this is on the macro, the longer term time scale. So this is like through the years, right? Opportunities to take some profits, but on the same wavelength, right? Put this on the weekly, right? It gave us what? And we're talking about looking back years, going back to 2015, 16 for Apple. And it's giving us the best opportunities below the 200-week moving average, right? So here, 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 you were buyers here. You were indefinite in profit. You never even seen any downside. Same thing here. You're indefinite profit thus far. Haven't even seen any downside. All you got to do is if you have it on this chart, right? So you have it on the weekly, go set it. For example, add alert, right? Boom, buy Apple. If you're a buyer of Apple, which I do hold Apple, create, boom. It's going to let me know if it ever gets in this type of situation ever again in the future. And I just sit back and wait. And so investing can be as easy as, hey, let it come to you, do the preparation first, instead of being a laggard and be like, oh, snap, what do I do now after prices have gone up? And so ideally, right, if I want to be a little bit more detailed, if I say, hey, I want to invest, maybe on, every, couple of months or every, couple of weeks, then yeah, drop it down to the 3 day. And so that gave you all of these, these local lows here, here, and here. And those are great opportunities to set yourself up for a low cost basis because investing, half the battle is trying to maintain a low cost basis, but invest enough to where you get enough liquidity and money into these assets through time. And so that's the goal of every investor. And so your ability to execute on that is solely on you. So coming up with the framework can really help you. And the beautiful thing is, for example, what did I do? I have these green lines here as an example. So when you use multiple metrics together, it gives you the confluence that can give you the confidence that you need to make the decision that can be helpful for you for the long term. And then so I have these green vertical bars that are firing off anytime that I see that I have a buy signal. So I believe this was on, let's see, the daily. Yeah. So anytime that I have a buy signal and I find that the fear and greed level for this asset is below 20. So these points here, 1, 2, 3, 4, and for example, let's move that one over, 5, right? So everything has been hit. And that would have allowed me, for example, if I'm just using this framework as an investor, that would have allowed me to get the best buy opportunities for Apple over the past, year and a half. And not just the best, but multiple opportunities. So we're talking about being able to buy Apple at like 135 bucks, 130 bucks, maybe opportunity at 129. Maybe recently here before it started to pump back up at 164, versus being a person that is FOMOing in after waiting for some type of confirmation. Oh, has it been going up for 3 weeks yet? Oh, it's been going up for a month yet? Oh, now let me get into the market at 180, 190 even, right? And then so this is all about having a nice cost basis. So that's the metric. I'm tucking it away for myself for now, but I don't know if y'all have some type of interest. Let me know. Ask me in the chat. Y'all can always hit me up on Telegram, and I may try to bring this to market and be able to help you guys essentially DCA in a way that makes sense for you. So with that being said, things are looking pretty good. Things are developing in a positive manner. The biggest thing is you don't need to be overexcited and you don't need to be too fearful at any point in time. Stick to your plan and understand that this is a process that takes time. As long as you're in it to win it and you have your eyes on the prize, don't let anything stop you. No type of FUD, no type of extreme optimism that's unrealistic. Stick to what you're doing, and y'all, you guys will do something, pretty amazing here with the opportunity that we have. So that's what I have for you guys today. So that was a lot. This is almost a 2-hour stream. Um, I appreciate you guys that you guys are in it right now, and you guys are not just asking about, hey, what coin to buy, because investing is much more than, hey, what coin is going to make me a millionaire. Truth be told, we really want to ask ourselves, hey, how can we sustain ourselves through time? Because life is long, God willing, right? And so you want to ask yourself, what can I do? What are the traits that I can learn? It's cool to have money, but do you have the traits to be able to sustain it, to secure it, bag it up, and multiply it, and not just get lucky one time in a crypto bull run? Because what we find is, yeah, there's people that made millions of dollars last bull run, but guess what? They have the habits of someone that don't know nothing, right? They don't know how to operate with money or how to have good risk analysis, and therefore they make bad decisions that gets them right back to where they started. And so the reason why I'm so devoted to giving you guys knowledge, not so much as far as, hey, what is this price action doing? It's just helping you guys learn framework, how to frame things, how to think about things, and then create something that works for you to give you success, not just for this month, but success for years to come. So yeah, any other questions before we head out? Let's see. Simple analysis on Hex. Um, yeah, I think I can get into that. Does anybody else have any analysis that they want to see before we jump off? Let's see here. Insert fry meme. Shut up and take my money. Yeah, I know, right? I mean, we're almost to that point. If Bitcoin is going to be sustained above that 40K, for a couple of months, yeah, that gives altcoins room to really go towards that capitalization of above what was that, what, 600 billion, and it's not that hard to do. Like, we literally went from 320 billion to what, 420 billion in a matter of a couple of weeks. So, altcoins can fly if Bitcoin gives them the room and the liquidity starts to kind of rotate, like how we're showing with the on-chain data. So let me see. Cool. I'm late. Good to catch you streaming again. Hey, appreciate it, Benny. It's good to be back. Like I said, I cannot promise a particular streaming schedule. I just know is I'm gonna sit back, uh, let things soak for myself, and then bring it back to you guys. And if this is something that you got to watch more than once, take your time. Definitely meditate on some of this information to see if you can conceptualize it and put it into some of your framework. So yeah, I think we still have some more time to DCA on some of these alts, and really that timeline is really seeming to be up until that halving. So 6 months. I really encourage you guys to go work your butt off out in the real world. Try to stack as much as you can, save as much as you can, and really utilize the opportunity before it's too late. I'm not a type of person that say hurry, 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 but time is passing, and this cycle is not waiting for nobody. So use the information to your benefit. Don't be a person that's just sitting on the sidelines and being indecisive. Getting in the game and getting the experience, win or loss, is better than never playing at all, right? And that's something I do know from playing sports for a very long time. Being in the game is the best experience because if you lose, great, you learn from your experience. If you win, you can win, but also you still want to be learning from your experience as well. So cool. I really appreciate you guys. This is the new normal. We're going to be experiencing more volatility. Things are going to start to catch people off guard. That's going to be normal as far as altcoins. Bitcoin is going to start to do things that people don't expect. And that is going to be the new normal, right? The depression phase is the depression phase, right? It's pretty easy to kind of feel out and see, hey, yeah, I see what's going on here. But we are in a very, very pivotal moment, right? Those bond yields, they seem to be relaxing because the liquidity is moving. And how do we know that's happening? Assets, especially the risky assets, are starting to get some life. So with that being said, I appreciate y'all. If y'all have any questions, never hesitate. Leave a comment. I want to let you guys know that for myself, I am dedicated. I am dedicated to continuing through not just this bull run, but I tell everybody I am dedicated till 2030 to crypto. So this ain't gonna be the last time y'all hear from me. I'm continuing to try to improve myself, to sharpen my sword, to help you guys in the ways that I think that I can. And that's mainly in the knowledge category. I'm not telling you what to buy or how to buy it. Um, I think I'm gonna get to that hex uh, analysis on the next stream. There's some things that I'm kind of assessing as we go, trying to look at some of these liquidity pools on the pulse side, but just overall the ecosystem, just in general, pulsex, pulse chain. I can speak for myself. It's something that I've dedicated a lot of time into trying to understand, and after doing that, my dollars voted as well and voted for me in terms of allocation. And so, whatever that may mean to you, you got to make your decision on what coin to get. But really, really doing the research and saying, okay, hey, how is this thing doing? Currently, even while Bitcoin is pumping, and other altcoins are going to have their day in the sun. But one thing that I'm really not going to count out is the community for Hex. Is like it's like unlike I haven't seen another community that man. How do I say it? There is some people that are so devoted that they essentially would almost give like their left leg. I haven't seen that for other coins. And so Hex, what I really think about it, and this is going to be an opinion that I share, Hex on Ethereum and on Pulse, it's still going to be able to trend with this market. Now, is it going for another 1000x? No, that's not going to happen. Liquidity needs to. I mean, those liquidity pools got to have a lot of money sitting in them to be able to even get hex up to like the $5-6 range, right? Um, so, and with that being said, hex is not the only game in town in the ecosystem, right? The money is spread across post X and post. And so, but if you're looking at the ecosystem as a whole, same thing. Is it going to get 1,000x from here? And I would venture to say no. Reason being is simply because the market cap, the liquidity that is already sitting in it. And so, if kind of looking at Metcalf's law, right, you need so much more liquidity sitting in those pools uh, to even get 100x, right? And I'm talking about, close to, hundreds of billions of dollars is sitting there, right? Um, that's something to ask yourself, what would the market cap be for the ecosystem if that's the case? Like you would need the market cap to be, several trillion dollars. And, ask yourself what other layer one at its peak was worth several trillion dollars. Um, None that I know of yet. Even Ethereum at its best, what was its market cap last cycle? I don't even know if it hit a trillion, right? So that's something to think about to temper your expectations, as what I'll say with the Pulse and Hex ecosystem. Is it going to do gains? Of course, it's in its first cycle, but temper your expectations. 1,000x might be a little lofty. 100x, a little lofty. 50x, okay. Now those are actually numbers that now actually we can quantify and that can be reasonable. And 30x, maybe like a for maybe not even a for sure, but hey, the likelihood that that's something that we've seen before from other cryptocurrencies as far as market capitalization. And so and I'm talking about for a coin that's in its first cycle. And so I think there's an opportunity across the board. Hex being one of them, but I'll give you a verbal analysis, and we'll do a little bit more TA analysis maybe on the next stream. So with that being said, I appreciate you guys. Hope you all have a good rest of y'all's week. Go out, tell somebody you love them, and really just try to enjoy your life as we trend through this mountain and we go to the top. And you already know what's at the top. Good times, good feeling, and don't forget to sell. All right, take those profits because that's what's going to really change your life financially. Because why do it if you're not going to do what's necessary? And that's being able to hey, go buy something that means a lot to you. Go help your parents. Maybe go buy your first house. Whatever you're gonna do, make it worth it. And so here's where we're doing the work, and you'll be happy at the end of the day. So till next time, peace.